Good morning, everybody. It's Tuesday, October 22nd, 5:22 a.m. Central Time. Grain markets are mixed this morning. December corn futures up a half cent at 410. November soybeans up a quarter at 981 and a quarter. December Chicago wheat down 3.5 at 568 and three quarters. December Kansas City wheat down 3.25 at 579. December spring wheat is down 3.25 at 610 and three quarters. Mackenzie is out today, so we're going old school. I'm going to be all by myself, which means that I can't drink my coffee as we tape, which is a big problem for me, but I think I'll survive. To get to our first story here, a rapid corn and soybean harvest is causing farmers to grapple with a storage shortage. That's a mouthful. I'm glad I pronounced that right. Shortage was already limited before harvest began, as many farmers were still holding last season's grain, waiting for the markets to improve, which never really happened to a significant degree. Some grain handlers across the nation are now storing corn outside, of course, due to lack of bin space. The fast harvest and lack of storage are forcing some farmers to sell their crops near four-year lows. I know we're off the lows, but still not good. Corn harvest is currently the second fastest of the last 10 years. Soybean harvest is the fastest since 2010. USDA projects record national average yields with regard to both crops this year. So this isn't surprising or shocking to you guys, especially if you're in areas with big crops. And there's a lot of areas with big crops. Perhaps the most interesting thing going on in the markets right now is not flat price, but it's the spreads. We've seen the spreads rally substantially. They've taken carry out of the market. This is the Dees March corn spread. If you guys are watching on my screen, it bottomed around 19 or 20 cents back in August, and it's trading near 13 this morning, which is a pretty sizable move in the spread. Soybean spreads are doing something similar to an even greater degree. The Novjan soybean spreads rallied like 10 cents just during the month of October, which is pretty substantial. And this is not something, these spread rallies, this is not something you normally see in these super well supplied or oversupplied markets. So what's going on with the spreads? I don't really know. It's a big head scratcher for me. One idea is that perhaps demand is doing better than anticipated. And I guess I can jump on board with that to some extent. We've seen some better export demand. Processors, both ethanol and soybean crushers, a little bit more active here, which is good. Maybe the crop's a little bit lighter than expected. I don't think I'm on that page. I think the corn crop is fantastic. Maybe you can make that argument with regard to the soybean crop. One thing that I think is possible, I'm not going to say it's likely or even probable, but possible, is that we see something similar to last year. Last year, we saw a little bit of a spread rally in mid-October, kind of like what we're seeing now. And the spreads ultimately collapsed into first notice day. And I think that something like this, a repeat of what we saw last year, is possible. So last year, around this date, we had similar levels of carry in this Dees to March corn spread, 14 cents ballpark. The spread ended up collapsing into first notice day, which is end of November, and traded record wide levels, traded out to, I think, 26 cents a carry, Dees to March. And what this does is it punishes the farmer who hasn't priced the futures portion of his grain. If you're sitting on basis contracts in particular and you were waiting for that flat price rally, this sort of spread collapse leaves you in a really tough spot. You've either got to price the futures, which oftentimes weaken into first notice day. That's not a prediction, but it happens quite a bit in well-supplied markets. Or you've got to roll your basis contract forward, in which case you eat the carry, which could be 20 cents or more Dees to March in corn if last year repeats itself. So I think it's good to be aware that the spread collapse happened later last year. It didn't really begin until earlier mid-November, whereas we were priced very similarly in that spread at this point in the ball game here, mid to late-ish October. So just some food for thought. But the spreads, I think, again, the rally in the spreads, it's one of the most interesting things going on in the futures market, at least, and kind of a head scratcher for me and I think for a lot of people. All right, second story. Chinese banks cut lending rates in a bid to support the struggling economy. I think this is part of the reason soybeans were able to rally yesterday. The rate cuts follow the People's Bank of China's decision to lower rates at the end of September. The cuts are also in line with the plan that the PBOC laid out to encourage households and businesses to borrow money. The quarter-point rate reductions, which were at the upper end of expectations, are partially aimed at supporting the struggling property market. They've got a 2008 type property crisis in China. If economic growth continues to falter, the PBOC said it may step in and reduce rates further. So they've been cutting basically, like they never had a rate hike cycle following COVID like we had. They had just flat rates and then rate cuts because the economy's in such tough shape. So this would lead some people to believe that China, I suppose, will import more soybeans from the United States. And I don't know if that's factual. I think that's going to be more a function of just how big the Brazilian crop is. But I don't mind the optimism, I guess. Third story up today: Brazilian soybean planting is the slowest in 4 years, at least through last Thursday, according to well-followed private group Ag Rural. As of last Thursday, Brazilian farmers had planted 18% of total expected soybean area. They were 30% last year. The majority of the delay in planting is due to slow pace in Mato Grosso in particular. Recent rainfall, however, across several regions is expected to boost planting progress in the coming weeks. Ag Rural also reported that 48% of Brazil's first corn crop had been planted as of last Thursday, compared to 46 last year. So they're actually ahead of last year with corn. The weather, this is a snapshot from our friends at World Weather. Brazil rains will continue to improve soybean planting. The forecast is wet, and they need the rain during planting season in Brazil. Farming in Brazil is different than it is in the United States. It gets so incredibly dry during the dry season, which is during our summer here in the U.S., essentially. If they plant without the rains this time of year, they risk emergence failure. They risk replant. They don't want to do that. It's too dry. So they've got to wait for the rains to come back. And that's what's happening now. As a percent of normal over the next 2 weeks or so, you're going to be normal-ish in most key soybean growing areas in Brazil. The far south is going to be a little bit drier than normal, but they caught some rains recently and maybe they're in a little bit better shape. So I don't really see a Brazilian crop threat on the table right now. Some premium stuff that you guys should check out. We do a new premium video every single business day. Last week, we did a really great video with my friend Lewis Stearns, who's an agronomist. Cost cutting for 2025, best practices. This is not a marketing video. It's an agronomy video. And as I said yesterday, I don't know a damn thing about agronomy, but Lewis does. And he laid out some of the negotiables and non-negotiables when it comes to cutting costs as it relates to farming. And I know all of you guys are working with agronomists. I know you're all working with seed dealers. I know they've all got their recommendations out there. And I'm not saying their recommendations are bad. I'm sure they do a great job. But to hear an unbiased third party talk about this stuff may be good for you guys. There's probably some good ROI associated with this video, I would venture to say. Yesterday, I talked about these 24 HTAs, roles, and some of the carry implications that we've seen with this recent rally in the spreads. This is what I call hardcore grain marketing information. Is it the most exciting stuff in the world? No, but this is the stuff that pays the bills. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. I know you guys are busy. I know you're in the combine. I know you're in the truck. I know it's a busy time of year. You can sign up on your phone. It takes about 30 seconds. We do Apple Pay, Google Pay, credit card. It'll take you 30 seconds. Everything that we send out is super easily accessible on your phone. It's just one click to play the videos. There's no PDFs to open. The emails are very easily read on your phone. Give that deal a shot this morning, guys. All right, let's keep going here. U.S. crop progress. Soybean harvest continues to progress at a rapid pace. U.S. soybeans were 81% harvested nationally through Sunday, compared to 67 the prior week and 67 on average. That is the fastest soybean harvest pace since 2010. States that have harvested 90% of the soybean crop or more include Iowa, Louisiana, Minnesota, Mississippi, South Dakota, and Wisconsin. Corn crop 65% harvested nationally through Sunday, compared to 47% the previous week and 52 on average. Corn harvest is the second fastest in the last 10 years. Looking at some graphics here, incredibly fast in both crops. Corn, second fastest of the last 10 years, and soybeans, extremely fast here relative to the last 10 years. You guys know it's been dry, and that we're probably going to continue this sort of harvest pace very quickly. Things are going to wrap up quick. There's no rain in the forecast here the next 7 days. The GFS would indicate that some rains return to the Corn Belt around November 1st. This is the GFS out through the 7th, and you've got some what I would call material rains in Iowa, Minnesota, Wisconsin, places like that, but not everywhere. I mean, the Eastern Corn Belt is still very much dry through that time frame. You look at the plains from North Dakota all the way down to Texas, very much dry during that time frame. So it's not everywhere. Harvest progress this thing's going to wrap up really fast. The Mississippi River is restrictive and is slated to remain restrictive, hugely restrictive, as a matter of fact. 8 or 9 feet below normal at Memphis this morning. It's going to get slightly worse by the 5th of November. Export inspections were good last week. Soybean inspections were good at 2.4. Corn inspections okay at about 1 million. Wheat inspections, not bad at 269,000. So we are in the midst of what I would call prime time U.S. soybean shipping season. So to ship 2.4, 2.5 million metric tons, on a weekly basis this time of year is perfectly normal, as you guys can see on the chart here. And we're going to continue to ship a lot of beans for the next few weeks. And then you kind of see this deceleration in December and into January. And then soybean shipments are very, very minimal in April, May, June, July, August. We ship more corn after January 1st. Once we get to that season, we'll start talking about that a little bit. Whole bunch of flash sales yesterday. Nothing that's overly exciting in terms of amounts. I guess the 264,000 metric ton soybean sale to unknown, again, is noteworthy. But a lot of this just kind of routine-ish business. Nothing that anybody's going to get really, really excited about. Outside markets here on Tuesday morning, we've got U.S. dollars down just a little bit. Stocks are off. The S&P's down 27. The bonds are down 200. I'm sorry, the Dow's down 200. Bonds are off just a little bit. Gold's up $12. Crude oil is up 67 cents. And the December WTI 70.70 last trade. Have a great day, guys. I'll be back on Wednesday.